Deepseek and the $2 trillion market shock. How a Chinese AI startup disrupted the US tech sector. Introduction: Artificial intelligence, AI, has become a cornerstone of the modern technology industry, driving innovation and economic growth. For years, US tech giants such as Microsoft, Google, and Nvidia have dominated the AI sector, investing billions of dollars into AI research, model development, and data infrastructure. However, in early 2025, a relatively unknown Chinese AI startup, Deepseek, sent shockwaves through global financial markets, wiping out approximately $2 trillion in US market capitalization. Deepseek's rapid rise has not only challenged the dominance of American AI companies but also raised concerns about economic competitiveness, technological leadership, and national security. This article explores what Deepseek is, how it disrupted the AI landscape, and why it led to massive financial losses in the US market. What is Deepseek? Deepseek is a Chinese AI startup that developed a large language model, LLM, called Deepseek V3. Unlike American AI models, which require billions of dollars in investment and large-scale GPU clusters, Deepseek achieves similar performance with a fraction of the cost. How Deepseek works. Deepseek's success is largely attributed to its highly optimized training approach and its ability to maximize computational efficiency. The model was trained using 2,000 GPUs over 55 days, compared to OpenAI's models, which require tens of thousands of GPUs. A budget of around $5.6 million, significantly lower than the hundreds of millions of dollars spent by American firms. Innovative algorithms that reduce computational costs while maintaining high accuracy. The model's performance has been benchmarked against leading AI systems like ChatGPT, Claude, and Gemini, demonstrating comparable or even superior capabilities in some tasks. Deepseek's market entry and impact. Deepseek was initially overlooked by Western 1. Panic selling in the stock market. The initial reaction to Deepseek's success was a sharp decline in AI-related stocks. The biggest losers included Nvidia, -17%, lost nearly $600 billion in market value. Microsoft, -12%, lost over $400 billion in market value. Alphabet, Google, -9%, lost over $250 billion in market value. Broadcom, -8%, lost over $150 billion in market value. Investors feared that if Deepseek could produce cutting-edge AI at a fraction of the cost, then big tech companies' AI investments might be overvalued. 2. Declining demand for US AI services. Many US AI companies, including OpenAI, Google, and Anthropic, charge premium prices for access to their AI models. If Deepseek could provide comparable performance at a lower cost, businesses might switch to cheaper alternatives, reducing revenue for American firms. Corporate clients exploring AI solutions could now consider Deepseek as a viable alternative. Investors began questioning the high valuation of AI companies, as they were built on the assumption of monopolistic control over the industry. 3. Nvidia's supply chain shock. Nvidia, the world's leading manufacturer of AI chips, GPUs, faced significant losses as investors feared reduced demand for its expensive hardware. Deepseek's efficiency meant that AI firms could achieve similar results with fewer GPUs, leading to concerns about Nvidia's future sales. The stock plunged 17% in a single day, causing a ripple effect throughout the semiconductor industry. The initial reaction to Deepseek's success was a sharp decline in AI-related stocks. The biggest losers included Nvidia, -17%, lost nearly $600 billion in market value. Microsoft, -12%, lost over $400 billion in market value. Alphabet, Google, -9%, lost over $250 billion in market value. Broadcom, -8%, lost over $150 billion in market value. Investors feared that if Deepseek could produce cutting-edge AI at a fraction of the cost, then big tech companies' AI investments might be overvalued. 2. Declining demand for US AI services. Many US AI companies, including OpenAI, Google, and Anthropic, charge premium prices for access to their AI models. If Deepseek could provide comparable performance at a lower cost, businesses might switch to cheaper alternatives, reducing revenue for American firms. Corporate clients exploring AI solutions could now consider Deepseek as a viable alternative. Investors began questioning the high valuation of AI companies, as they were built on the assumption of monopolistic control over the industry. 3. NVIDIA's supply chain shock. NVIDIA, the world's leading manufacturer of AI chips, GPUs, faced significant losses as investors feared reduced demand for its expensive hardware. Deepseek's efficiency meant that AI firms could achieve similar results with fewer GPUs, leading to concerns about NVIDIA's future sales. The stock plunged 17% in a single day, causing a ripple effect throughout the semiconductor industry. Government response and trade tensions. The US government reacted swiftly to Deepseek's rise. President Donald Trump called it a wake-up call for America's AI industry. New tariffs on semiconductor imports were announced to protect US tech dominance. The Commerce Department considered restrictions on exporting AI-related technology to China. These responses added uncertainty to the market, further driving down tech stocks. 5. Fear of national security risks. Another major factor behind the stock market turmoil was concern over national security risks associated with Deepseek. US intelligence agencies warned that Deepseek could collect and store user data in China. There were fears that China could use AI models for surveillance, cyber warfare, or economic espionage. Lawmakers called for investigations into Deepseek's ties to the Chinese government. This intensified regulatory pressure on AI firms and led to additional stock market declines. The bigger picture, the AI race between the US and China. Deepseek's success represents a major shift in the global AI landscape. For years, the US led AI innovation, but China has rapidly closed the gap. China's AI strategy. China has made AI development a national priority, with strong government support, vast data resources, and a massive talent pool. Key advantages include government funding. The Chinese government provides direct financial and infrastructure support to AI firms. Data access. China has a huge population, providing AI companies with vast amounts of data to train their models. Cost efficiency. Chinese firms prioritize cost-effective AI training, as seen with Deepseek. U.S. AI companies' challenges. American tech companies face several challenges that could hinder their ability to compete with China's AI firms. High operational costs. US AI companies spend billions on cloud computing and GPUs, making them less efficient than Deepseek. Regulatory scrutiny. U.S. What's next for US AI companies? In the wake of Deepseek's disruption, US AI companies must adapt quickly to remain competitive. Several potential strategies could help them recover from the $2 trillion market shock. 1. Cutting AI development costs. To match Deepseek's efficiency, US companies might streamline their AI training processes to reduce expenses, optimizing GPU usage and developing more energy-efficient AI models. Partnering with global semiconductor firms to secure cost-effective hardware. 2. Strengthening AI regulations against China. The US government could impose stricter regulations on AI firms operating in China to protect national security and intellectual property. Banning government contracts with AI firms that use Chinese models. Increasing scrutiny of AI models trained in China to ensure data privacy and security. 3. Expanding global AI leadership. To counter China's AI rise, the US might strengthen partnerships with European and Asian allies to collaborate on AI development. Joint AI research initiatives with the European Union and Japan. Encouraging open-source AI models to ensure US-led AI remains dominant. Conclusion. Deepseek's rapid ascent marks a turning point in the global AI industry. By developing a powerful AI model at a fraction of the cost, Deepseek has demonstrated that China is a serious contender in the AI race. The $2 trillion market shock suffered by US tech giants highlights the vulnerabilities of the current AI business model, where companies spend billions on AI development with uncertain long-term returns. Moving forward, the US must innovate faster, regulate wisely, and build strategic AI partnerships to maintain its leadership in the AI sector. The coming years will determine whether the US can recover from this financial blow and stay ahead in the AI revolution. The $2 trillion shock, how Deepseek's rise led to massive US market losses. Introduction. In early 2025, the US stock market faced one of its most significant downturns, with nearly $2 trillion in market capitalization wiped out in just days. The cause? A Chinese artificial intelligence (AI) startup named Deepseek. This unexpected disruptor unveiled a cost-efficient AI model that challenged the dominance of US tech giants like Nvidia, Microsoft, Google, and Broadcom. Deepseek's ability to develop AI at a fraction of the cost of US companies triggered panic selling, leading to massive stock losses across the tech sector. This article explores how and why Deepseek's emergence led to one of the largest financial setbacks in US history. What caused the $2 trillion market loss? The financial meltdown stemmed from investor panic and fundamental shifts in AI economics. Several key factors contributed to the sudden decline in stock value. 1. Market panic over AI cost efficiency. For years, investors believed that higher AI spending meant better performance and stronger market dominance. Companies like OpenAI, Google, and Microsoft poured billions of dollars into AI model development, assuming their massive investments would keep them ahead of competitors. However, Deepseek proved otherwise. The company's AI model, Deepseek V3, achieved similar or superior performance to ChatGPT and Google's Gemini, but at a fraction of the cost. Deepseek's training cost $5.6 million. OpenAI's GPT-4 training cost estimated $100+ million. Google's Gemini AI cost estimated $200+ million. This revelation shattered market confidence in the idea that AI dominance required massive spending. If Deepseek could deliver top-tier AI performance at lower costs, it meant US AI companies were overvalued. Their massive R&D spending was no longer justified. Future AI profits could shrink, hurting stock prices. As this realization spread, investors began dumping AI stock. 3. Microsoft, Google, and AI service providers took heavy losses. Tech giants like Microsoft and Google have invested billions into AI research, cloud computing, and AI-powered services. They rely on premium pricing models for AI tools, assuming customers will pay for the best models. Deepseek's cost-efficient AI disrupted this assumption. If Deepseek could offer similar AI services at lower costs, it meant Google's and Microsoft's AI services could become overpriced. Businesses might switch to cheaper AI models, reducing revenue. AI infrastructure spending could be re-evaluated by investors. This led to massive stock declines. Microsoft, minus 12%. Lost over $400 billion in market value. Alphabet, Google, minus 9%, lost over $250 billion in market value. Amazon, minus 7%, also affected due to its AI and cloud computing investments. 4. The US-China AI war and regulatory uncertainty. Deepseek's rise wasn't just a business issue, it became a geopolitical concern. The US government immediately reacted, fearing China's growing dominance in AI, potential data security risks if Deepseek's AI models were used by American businesses, a loss of US leadership in cutting-edge AI technology. In response, President Donald Trump announced New tariffs on semiconductor imports to protect US tech firms. Stricter regulations on Chinese AI models, potentially banning their use in sensitive industries. A call for more US government investment in AI to counter China's rise. However, these regulatory uncertainties only added to investor panic. If new laws restricted AI trade, it could further hurt US AI firms, leading to more stock market declines, analysts. However, once the model was released, it quickly became evident that its cost efficiency and performance posed a serious threat to US AI companies. Investors reacted with panic, causing a massive sell-off of AI-related stocks in the US. How the US lost $2 trillion in market value. Deepseek's emergence had far-reaching consequences for the US stock market, leading to an estimated $2 trillion in market capitalization losses. Several key factors contributed to this financial meltdown.